Hey, what's going on, y'all? Steve Peterson here, checking in. Today's video is a little bit different, man. It's a little bit more of a conversation as we're sitting at July 31st, 2020, and we're talking about real estate investing strategies in the pandemic era, especially since that a lot of things may change in the month of August. Particularly in the commercial real estate world, a lot of commercial banks are not extending forbearance to their mortgagees in past August. So a lot of the commercial banks are saying, hey, we've given you a breather. Now in August, we are expecting to collect on our mortgages. Meanwhile, here in the great state of California, and particularly in Oakland and other cities, the eviction moratorium has been extended. And believe right now, it's kind of a open-ended thing until the pandemic's over. Now, I believe that's for sure going to probably be through the end of this year. So there's going to be many people who maybe own commercial and investment property who their tenants been laid off or not able to pay, and then the landlord's not able to evict. At the same time, the mortgage company saying, we need to collect that money now. So what do? This is truly uncharted territory, to say the least. However, look, it's a problem, and for every problem, there's solutions. So the key is to think with a cool head and a warm heart and figure our ways out through this. Okay, and I think the first thing we need to do is to have a plan. If you own investment property, commercial property, develop a plan, a battle plan of action, how you're going to navigate through the pandemic. It's not time to bury your head in the sand. It's not time to say the Republicans or the Democrats or the whoever's, you know what I mean? It is what it is, man. Nobody wants this virus to be here. People want to be out and about and doing their stuff, but the bottom line is it's here. All right. So the key is we need to plan up so we can operate through. And I think one of the first things you can do to put in your plan is to say, hey, let's reach out to our existing lender to work something out. Do not avoid them. Come calmly, coolly, collectively, reasoning with them. Hey, my tenants can't pay me. I can't evict my tenants. Let's figure something out. And maybe you can't make the full payment. Maybe you can put something towards the payment. Maybe you can negotiate an agreement. I think now is where negotiation skills are going to come in, and they're going to be key. Because a lot in the real estate market the last couple of years, the negotiation strategy is, all right, what's the highest and best offer? Let me beat that offer. All right. So we kind of, negotiation in many ways has been a lost art, but now more than ever, we're going to have to negotiate our way through some things. And I think reach out to your bank, work this, because you guys are essentially in the same boat. The bank, if they're a bank, regulated bank, they actually don't want to take your property back. It's going to be a black eye on their balance sheet. At the same time, they are running a business. They got to do what they have to do. So hopefully you can reach out to them and then work something out. So I'm saying, number one, set up a plan. Number two, reach out to your existing lender. Now, if you're an investor out there and you're trying to acquire property, right? You're saying, I'm looking to buy properties. I got a client right now. We're in a 1031 exchange, selling her property. She needs to buy another property. All right. So what's interesting in this time is that there's not like a plethora of deals on the market right now. Sellers aren't saying, all right, well, the pandemic hit. Here goes my property. Take it off my hands. Nah, they're not saying that, right? In my experience right now, sellers are still asking for the prices they were asking for before the pandemic. In the residential world, they're getting those prices. In the commercial world, well, it depends on what product type. Office, retail, hospitality, depends on whether you have essential, tenants or not. If you're in the hospitality industry, tough right now. Retail, not a good look. Office, it's a mixed bag because it depends on your tenancy. Do you have essential tenants in your building? Do you not have essential tenants? Okay, that really is difficult. Apartments and industrial doing much better, but I think apartments, especially in the Bay Area where I'm at, we're going to have an issue where some people not going to be able to pay, right? So as we're evaluating as buyers and as brokers trying to figure out how to buy properties in this pandemic, I think there's a couple things that we got to keep in mind here. First of all, you got to be buying for the long haul, because you have absolutely nobody can tell you with absolute certainty what the market is going to do. I mean, and even the smartest economic cats or wizards or, experts. They can't tell you, hey, well, this is what happened in 19 such and such after the other pandemic, because this is kind of unique, man. There was the Spanish flu back in, I think, 1918. But this is different. The world is interconnected. And now there's been a break in the action, so to speak. And there's no clear model of what to do. So nobody can with exact certainty tell you, oh, this is how it was before. This is what we need to do. Therefore, you need to make your investment based on underlying fundamentals of the financials of the property and the tenants that occupy. In other words, if you're buying an apartment building and you're analyzing the income of the apartment, but how much of those rents coming in from Section 8 or VA, VASH, or how much of those rents are guaranteed? Okay, how much of the tenants are continuing to pay? All right, what is the profile of the tenants? Now, a lot of times that information may or may not be available. So you may just have to really get your feet to the street, walk units, and that's even difficult. But you got to do what you can to get a real clear understanding of the tenant who occupy that property. You got to really understand that rent roll, okay? Understand that neighborhood, that area, what's going on. If you lose some tenants, can you get some new tenants at the same rent? Or you're going to have to drop that rent, okay? Every area is really different, The Bay Area, touts a lot of technology jobs. A lot of people have been laid off. A lot of people are able to work from home. But at the end of the day, we have to go through some stress and strain as well. And the rental laws, like in the city of Oakland, you can't evict nobody. So you really need to understand where those clients are. And I think when you run your numbers, you need to look and maybe say, hey, can we take a 5 to 10% hit on the rents and still be functional? Meaning, can we pay all the bills and the mortgage and still keep rolling? You want to invest for cash flow, but you want to cover your downside risk. And so when I was doing deals back in the Great Recession, like in '09, before we knew where the bottom was, a couple of the investors that I worked with said, okay, well, look, I'm going to look at this building. It's half vacant building. What if the building lost even more tenants? Can I still make it? Then they looked and said, okay, well, is there a market for rentals in this area right now? Right? And you take into those factors, you really run your numbers, and you got to kind of, I don't want to say forget about appreciation, but that's really got to be on the back burner. You can't go into a deal saying, I'm going to buy this property, I'm going to, fix it up and shoot the value up, because it may be tough to get the rents you're trying to get. We don't know where cap rates are going to. People are saying, hey, cap rates are going to stay low because the treasury's low. That's common thinking, but we don't know what's going to happen in a year from now. So what you really got to do is make your decision based on the fundamentals, and then look even a step further. I say fundamentals, by the way, the income and expense, the net operating income, the cap rate, the cash on cash return, the measures of performance in an investment, not necessarily, it's going to go up. All right. Then you got to look further to see who are the tenants on that rent roll. How likely are they are going to be able to pay? And in apartments, it could be a little bit difficult. Okay. In commercial, pure commercial, where you got dealing with companies, it's actually a little bit easier to really dive into that company to see, are they going to be able to make it? And I think the key is, are they essential? Is their business going to be allowed to operate in this environment? Because here's the deal, you guys. While a lot of companies are falling off, a lot of companies have to lay off people, there's a lot of other companies that are expanding, a lot of other companies that are thriving in this environment, okay? And it's not about good, bad, it's about, okay, which ones I think are essential and are going to be, are going to be the business that you just can't close, that we need to operate during this time. You know what I mean? And so I don't know who the person who gets to decide which business is essential or not. I know there's a bunch of people whose businesses have been deemed to remain closed. They feel like their business is essential for sure. But at the end of the day, when you're an investor and you're looking at that rent roll, especially if it's a retail, especially if it's an office, look, can that tenant make it? I'm looking at an office building right now, and it's full of essential tenants. Right? For a client, it's full of essential tenants. They all keep paying. Nobody's laying people off. That's a great building right now. All right? You might have a Class A building, middle of San Francisco, but if all those tenants are not essential, shutting down, who cares, right? Because they can't operate. So those are, just some of the things I think we got to look at. You got to have a plan. You got to talk to your lender. And if you're out here looking at properties, evaluating properties, you really need to make decisions based on the fundamentals and look into the tenancy. Are they essential workers? Are they essential businesses? Is there guaranteed rents coming in? Have they been paying during the pandemic? Okay. And then those are just a couple things that can help you out. I think this needs to be an ongoing, we need to turn our, minds up in terms of learning, growing, negotiating, going the extra mile. Let's just not be fooled by this stimulus money that may come back in, because sometimes people think, okay, the stimulus is out there, deals are closing, everything's fine, and, peaches and cream. But you know what? Underneath the surface is some challenges going on. And I wanted to address those because I see in the month of August, I think some of those challenges will be coming to the surface. Let's not panic. Never good to panic. Let's be dialed in. Let's be focused. Let's learn more than ever. Let's see how we can be leaders in our communities, in our companies, in our families. And let's charge forward in this in this pandemic era. Hope this was helpful. If it is, please subscribe to this station. Throw me a like. If you don't like it, throw me a dislike and tell me why you don't like it. You know what I mean? We're really hoping to have an engaging conversation. That's what I wanted this video to be, just a conversation. Me at my house, you at your house watching. Let's stay connected, you guys. Let's tap in, and you guys be the leaders you desire to see. Thanks a lot. Peace out.